Thank you. Let me start with a short statement. Good morning. Recent readings suggest that headline inflation, both retail and wholesale, have increased, mainly but not exclusively on account of food prices. While core CPI and core wholesale price index, that is inflation excluding food and fuel, have been stable, despite a steady and necessary increase in government-administered prices towards market levels, the high level of core CPI inflation leaves no room for complacency. There is, however, reason to wait before determining the course of monetary policy. There are indications that vegetable prices may be turning down sharply, although intermediaries could impede the full pass-through into lower retail inflation. Our own current readings from the metros suggest a significant fall in vegetable prices, both at the wholesale and retail level, which gives us reason to make this statement. In addition, the disinflationary impact of recent exchange rate stability should play out into prices. Finally, the negative output gap, including the recent observed slowdown in services growth, as well as the lagged effects of effective monetary tightening since July, should help contain inflation. This policy decision, which is to stay on hold, is a close one. Current inflation is too high, and I repeat, it is too high. However, there are wide bands of uncertainty surrounding the short-term path of inflation from its high current levels. Given the weak state of the economy, the inadvisability of overly reactive policy action, as well as the long lags with which monetary policy works, there is merit to wait for more data so that uncertainty can be reduced before we act. There are obvious risks to waiting for more data, including the possibility that tapering of quantitative easing by the U.S. Fed may disrupt external markets and that the Reserve Bank may be perceived to be soft on inflation. Let me assure you that the Reserve Bank will be vigilant. Even though the Reserve Bank has maintained status quo today, it can help guide market expectations through a clearer description of its policy reaction function, which is, if the expected softening of food inflation does not materialize and translate into a significant reduction in headline inflation in the next round of data releases, or if inflation, excluding food and fuel, does not fall, and note there's an or here, which means both conditions have to be met, the Reserve Bank will act, including on off-policy dates if warranted, so that inflation expectations stabilize and an environment conducive to sustainable growth takes hold. The Reserve Bank's policy action on those dates will be appropriately calibrated. Finally, let me add that following our commitment to restore economic value to financially distressed projects and to clean up problem assets in the financial system, the Reserve Bank has put out a discussion paper for comment yesterday. After a comment period of 2 weeks, we will issue the appropriate circulars. With that, I'm happy to take questions.
Yes, Lata. Lata Venkatesh from CNBC TV 18. Governor, we were expecting a Volcker. We've got a Yellen. Your trajectory is, which you gave us in the October policy, would indicate that your forecast would be, at this moment, it should be something like below 9%, the CPI inflation, if we went by your fan chart. You are 2.5 percentage points higher than where you were. What do you want your next reading to be? How should we read the RBI? Should it be like, if it came at 10.5, how should we understand? If it came at 10, what should we understand? Does it satisfy your trajectory?
So, first, to your Volcker, Yellen, etc., how about Raghuram Rajan? Right? No, I think it's important to resist the labels of dovish, hawkish, etc. We are trying to calibrate monetary policy primarily to target inflation in an environment where the economy is weak. So when we take action, we have to be convinced that the action is merited at that point, which is why we're waiting to take action. This is, in some ways, I mean, if you want to go into theory, this is Brainard's, when there's a lot of uncertainty, you want to wait for more data to come in to get a sense of how you want to act. The precise calibration of action, remember that any monetary policy action is determined by a variety of variables. So if I tell you if it is X, we will raise the rate by Y, I can't tell you that because the rate decision depends not just on a particular indicator, but a variety of indicators. What we've said is that we need to see a substantial softening of both headline inflation as well as some momentum in the right direction in core inflation. That is what we'll be waiting for. The precise numbers, I don't think it is that clearly, demarcated.
So in your hierarchy of parameters, core inflation, core CPI would be the most important?
I didn't say that. I said we will look at a number of parameters, but we do want to see a softening in core inflation.
Anirudh?
Afternoon, Governor. Anirudh from ET now. I'd like just two very quick questions. Firstly, in terms of your target for growth and, given the recent IIP numbers, how concerning is the slowdown in growth? And like you've mentioned that you'll be looking at the next data release as far as inflation is concerned, would the next GDP or IIP release also be as important? And secondly, given that most of these concerns on inflation are supply-driven, and given that the government is expected to go a little slower on the policy action, how concerning would that aspect be from the policy side as well?
I think certainly we will look at the growth number, but we also want to see, our sense is growth is below potential even now. And that effect of the negative output gap should be seen in the inflation numbers. If it is not seen and that transmission is not taking place, we have to query our assumptions, and that will be an important factor also. I mean, there is this argument which has often been made that the supply side is what is the constraint, and clearly there are some supply side constraints. But I've said repeatedly, and I'll repeat once more, that ultimately inflation is a mismatch between demand and supply. If the supply is not responding, you can't keep postponing decisions saying it's because of the supply side. There is inflation, and that will mean we have to bring demand in closer match to supply. Now, you mentioned a very weak economy. That will give us some indications of the demand side, but we have to balance the two.
Ritesh?
Governor Ritesh from Z Business. Sir, two quick questions. Firstly, in the last policy also you said that second half will be better for the economy. Given the recent IIP numbers and the other numbers, the inflation numbers also, are you still confident and equally confident of the recovery in the second half? Because we all are talking about the green shoots, but the number doesn't show anywhere. And second question is about the monetary policy transmission. Last time around in the monetary policy, RBI had hiked rates, but not many banks had passed it on. So that also, the lagged effect which RBI talks about in this current policy cannot be seen actually. So is RBI happy about the way monetary policy transmission has happened last time?
But to some extent, remember that when RBI cut rates, the cuts weren't transmitted. So there seems to be a certain amount of lag in the system, if you will, or a lack of response. But I think going forward, we will have to calibrate policy, to the circumstances. You talked about growth in the second half. Our sense is still that growth in the second half will be stronger than growth in the first half. Of course, the factors that will play out are the factors that have been playing out so far, which is agriculture, exports, and the long but delayed awaiting of the stalled projects coming back online. We hope they will come back online. That will help aid growth. That will also help sentiment. It is important, however, that everybody, government, RBI, be vigilant to the growth scenario.
Will you still hold on to the number projection which RBI gave it last time?
I think, give or take a few basis points, yes.
Thank you.
Saloni? Governor, good morning. Saloni from Bloomberg. So first question would be on, the gloomy picture from the last week that we're seeing in terms of the numbers that we saw. On the fiscal deficit front, we still see a lot of concern, though CAD has receded. I would like to know your own reading as to how big that would be a concern, because even in the document you've mentioned that given the fact that fiscal deficit still remains high, the government would go on an expenditure cut. One, your concerns regarding that picture. Also, just to understand your stance as far as this monetary policy is concerned, given the fact that January will be a high agricultural output season, you will wait for data to read as far as the food inflation and the CPI numbers go.
Yes, as far as the data goes, we will be looking at all indicators of inflation. I think the government has reiterated again and again its commitment to its fiscal deficit target. My own discussions with government officials suggest that they are very firm on achieving it, and they will achieve it, March end. So that will mean, given where we are, a certain amount of expenditure contraction in the fourth quarter. That will have some adverse growth effects, of course, but that is part of I think what they need to do in order to meet the numbers they have set out. Of course, an increase in disinvestment from where we are now, greater revenues from state-owned companies will also help meet the deficit target. How much that happens, we have to wait and see. But I have been reassured time and again in private, but also I think public statements by the government have been that the fiscal deficit target will be met.
Suvashri?
Suvashri from Reuters. Congratulations for a brave policy decision this time.
Yes, Minister, brave is often a dangerous word.
Okay. Anyway, I come to the question, Governor. I just wanted to clarify the RBI's policy stance. Given that, is there a change in the stance given that, do you think that the monetary policy will not handle a vegetable price-led inflation, and that is why you want to handle it through non-monetary policy-related issues? That is why you did not do a rate hike this time. And even going ahead, if inflation is driven by vegetable prices or food prices, you will not tackle it through monetary policy?
I don't think you should read it that way. I think what we're saying is that we will not react to every spike in inflation that is temporary. Monetary policy, after all, operates with long lags, 3 to 4 quarters, right? So whatever we do now is about affecting things, output, a few months, a few quarters down the line. So we have to be sure that what we're dealing with is longer-term phenomena rather than a short-term spike in certain elements. Our sense from looking at the data that we have access to, not just reading the newspapers, but data that we have access to, is that at least from a sample of metros, and this is not as comprehensive as the inflation data collected by the government, but certainly sampling of metros suggests that vegetable inflation is coming down quite sharply. So in that sense, our view is this may be a spike. Let us look through it. And our belief is that so long as we reiterate our commitment towards tackling inflation, people should not doubt our commitment to that. And what we're doing is basically looking through spikes and seeing the longer-term movement, which we hope will be reflected in the next round of data.
Bijoy?
Governor, 2 quick questions. One is, has CAD clearly moved down your priority list when you're looking at factors? Is, the local factors now clearly driving your policy decisions? And on the other front, sir, you spoke about liquidity in your policy statement. Do you think you'll have to continue to maintain the curbs on liquidity so that the term repo windows that you all have created become, more acceptable and more, to make it viable for people to borrow at term repo? Do you think you'll have to kind of maintain liquidity at those, tight levels?
Okay, on the first issue, the external environment cannot be something that we become complacent about. And we are certainly focused continually on the external environment. As I've said before, we are in a better position to, withstand the volatility stemming from tapering. Our current account deficit is significantly lower, and we have shown the ability to raise money if we need. If you look at FII inflows since April 1st, on net now they're negative 2 billion. In other words, the equity inflows have offset the debt outflows by a considerable margin. If you look at debt, they were outflows till about late November. Early December, we started seeing inflows once again. All this suggests we are in a better situation. But I don't think anybody in the world, including the Federal Reserve, knows the consequences of what happens when they announce tapering. I think the maximum likelihood at this point is tapering light, as some people call it, starting tomorrow. But, whether it's tomorrow or next month or the month after, it has to happen. And we're better prepared to withstand it, but we cannot in any way take our eye off the ball. So on the external environment, I think we're still focused. Current account deficit, I would be much happier if, we had the kind of current account deficit we have without significant curbs on anything, including gold. I think that is our aim. We should aim for having a current account deficit without any distortions, removing the incentives for smuggling, etc. That is what we will work for, but at this point, I feel very comfortable with where we are on the current account deficit. On liquidity measures, let me turn to Dr. Urjit Patel.
Thank you. The term repo market has been put in place, but that does not mean that we would not have normal monetary policy at the overnight tenor, and therefore, while we strive to get to a normal monetary policy at the overnight tenor, we find that banks find the 15-day and possibly even going forward the 1 month repo to be quite suitable for their purposes, and therefore that would carry some term premia. And for the moment, not only for domestic reasons, but for the reasons that the governor just outlined in terms of being vigilant on the external front, the curbs on the overnight repo at 0.5 of NDTL will continue to be there.
Aparna? This is Aparna from Financial Express. My question is, clearly in the growth inflation mix, you would have seen something more overwhelming on the growth side to pause today, because you have said that a rate hike today would have been overly reactive from the RBI. What I wanted to know is, we have never seen CPI maybe below 9% in the last 3 to 4 years. And entrenched food inflation, history shows that entrenched food inflation eventually spreads to the other parts. What was it on the growth side that you saw that made you pause today? And I have one more question on transmission. This is an offshoot of what Bijoy asked. You have a ceiling on the LAF window, and because of the ceiling, the pricing of immediate liquidity is somewhere between the repo rate and the MSF rate. In your response to inflation going forward, where will liquidity and where will this corridor feature? And how would you tweak it, if at all?
Go back to you. On this issue of overly reactive, the point that we were trying to make there is, we shouldn't react to every reading of inflation if we believe that inflation will come down. In other words, if we set the level of policy consistent with 11.24 reading on CPI headline, and it came down to 9 next month, or 9.5, or whatever the number is, would we then react to that 9.5 again by changing the policy rate? In other words, we have to see through that. We are vigilant for the possibility that food inflation may be more entrenched. We are not ignoring food inflation, but we'd like to see through the noise. And for that, we want to wait a month more, right? Till the data comes in, to see what those data readings suggest. So this is not in any way changing trade-offs between growth and inflation or anything of that sort. This is saying that as responsible central bankers, in an environment where there is a weak economy, we have to try and see what is the underlying strength of inflation that we're trying to tackle, recognizing that monetary policy works with fairly long lags. So we will calibrate the level of the policy rate consistent with what we think the underlying inflation is. Our sense is the recent numbers add a lot of noise, and we want to look through them. We also want to see, what's been happening because of the last couple of rate hikes, what's been happening as a result of the exchange pass-through. Remember, the exchange rate has also strengthened. And we think another month's reading will not be, put us way behind the ball in some sense. And we will, at that point, set policy accordingly. So what we're trying to do is be responsible central bankers.
Govardhan?
Yeah.
So Govardhan from the Economic Times. Govardhan from the Economic Times. You had maintained that the real returns for saver is a lot more important than anything else for the economy to come back. But with the still real negative returns for investors, for savers, and inflation and your stance, is there a contradiction in what you have done today? And two, is that you said that we will not react to every spike that's happening. And in the last 3-4 years, okay, your predecessor had taken this stance once, and he came in for criticism, and especially from Mr. Patel when he was outside of RBI at that point of time. So what is that you are risking here?
I don't think we're... I don't want to say we're risking nothing, because in the policy statement we have said that any kind of sense that we're on status quo will immediately raise questions of whether we're being soft on inflation. I want to emphasize we're not being soft on inflation. We're waiting for data. I also want to emphasize that it shouldn't be taken that we are on hold. We are waiting for data, and as the data come in, we will react appropriately. Now, just as an aside, I should emphasize that there are actions that the government can take on some of these supply side issues, and I think there has been some movement by the government, for example, in releasing wheat stocks, but can more action be taken by both the central government and the state government in bringing down food prices that will help in the overall inflationary environment? We do want inflation to come down to a level where savers have a positive real return, where the savings rate in the economy comes back to some of the levels it has seen in the past. And there's no reason why it should not. And especially this should come back into financial savings. So again, I think what the takeaway is that policy will continue to be calibrated to the incoming data. Our sense is the current data was marred by a certain amount of noise, and once we see the new data, we will see whether the trends are consistent with the disinflation that we want in the economy. If it's not, we will act accordingly. You want to add anything, Rujit?
No, just to say that the forward guidance in the last para is about the strongest I've seen from the RBI, that if the expected softening of food inflation does not materialize and translate into a significant reduction in headline next month, or if inflation excluding food and fuel does not fall, the RBI will act. And I think what the governor has said, that if we believe that the increase in vegetable prices in the latest read is temporary, then actually it would be not good policy to have reacted to it, given that everything else has stayed the same. CPI excluding food and fuel, a marginal increase of just 0.1% on the non-food manufacturing on the WPI side. So reading that and the forward guidance, I think there is no doubt that we are extremely vigilant regarding inflation reads that are more than transitory. But it would not be right for us to have acted if we, and I think everyone else seems to be saying that it could be transitory. Right. So we'll see.
But let me also add to what Dr. Urjit Patel has said, that we're not happy with the level of core CPI either, even though it has stayed stationary. We want to see it come down, which is why that second statement in the forward guidance should be also taken seriously. We want to see some softening in the core to see that the transmission that we've been awaiting actually takes place.
If you can read that paragraph further, you end that paragraph, Dr. Patel, with the guidance that the Reserve Bank's policy action on those days will be appropriately calibrated. Should we understand that you're warning about 50 basis? Or are you warning that no, we will be very calibrated? How should we understand calibration?
Lata, I love your attempts to get us to say more than we want to say. Appropriately calibrated means appropriately calibrated. It means that there is more than just one number. There are multiple numbers, and we'll pick the one that is appropriate for that date. I think you can read whatever you want into that now.
No, I want you to read.
No, we're not defining a particular number. We're saying the number will be appropriate to that particular reading.
Can we check 1 minute? Can we just check outside if there are any questions on your side, Shaima?
Sure, ma'am. Participants connected to the audio bridge, if they wish to ask a question, you may press star and 1 on your touchtone telephone.
There are no questions.
No, there are.
Yeah, there is one. No, chartered accountant. No. Okay, one last question from this room. So would you want to pick or choose?
No, your choice. You choose.
Okay, I'll close my eyes. Pradeep?
Pradeep Pandya from CNBC Awaaz. To follow up on the question that you answered about fiscal contraction, since you said there would be growth implications, are you also assuming there would be inflationary or disinflationary implications if government does cut down the expenditure? So should we think that that is one of the basis on which you have taken today's decision? And second, last year when they did some similar exercise, a lot of the expenditure cut in March quarter was actually a rollover to the first quarter of next fiscal. So what is the kind of quantity and quality of expenditure cut that you are looking at?
First, on the yes, if you look at the policy statement, we are also saying that we expect expenditure reductions in the fourth quarter, which will be disinflationary, and that is something we are looking at also. Again, it depends on the outcomes and how the government acts. My reading is that there's always a certain amount of rollover. I don't expect the net rollover this year to be significantly greater than the net rollover from last year. But of course, we have to wait to see policy action for that. But my discussions don't suggest that there will be an increase in that to a significant extent. Of course, that is not something we are factoring in a big way.
Governor, just one last question. You spoke about your ability, you're raising and building the foreign exchange reserve. So is this going to be fluidic from now on or more calibrated in nature in terms of building up the further foreign exchange reserves that we've already started on?
Our foreign exchange reserves have built up on the backs of the FCNR and capital window that we opened, where we took the money directly into reserves. Mm-hmm. We are not, in a sense, targeting an exchange rate, and therefore we're not going into the market and buying reserves at this point to increase the foreign exchange reserves. We haven't done that. It's basically what's come in through that window.
And that's not your intent either?
I didn't say that. I said we have not done that, and the increase in reserves thus far have come from those windows.
And are you content with the subside of volatility in the currency? 61, 62 is where we are at right now.
I think we are happy with the reduction in volatility, and that was our aim right through. We wanted to reduce volatility. We also wanted to reduce these unhinged expectations that there was a point where analysts were competing with each other to see how weak they could proclaim the rupee to be at the end of the year. We hope that that unhinging of expectations has come down. As I said, we are watchful for the taper. We think volatility will increase then, but we think we have we are better positioned to weather that volatility.
Governor, just one question on the bad loan report which you just put out. Just one small question on the
bad loan report. I'm happy to answer a question on that. Yes.
Sir, some of the analysts believe that the numbers which are there of the bad loans in the system are not very trustable. Do you think that this report is going to address the issue? And second short question is, you mentioned about the role of private equity players in the market. There's not much elaboration in the discussion paper. Could you please throw some light on that issue, sir?
No, look, the discussion paper is out there for basic comments, after which some of the measures will be detailed. In terms of how large the size of the loan problem is, and whether we know something significantly more that we are reacting to, the answer is no. I think what you see out there is what we are reacting to, and saying that the level of NPAs as well as restructured loans is not alarming at this point, but is something that we want to take action quickly before it gets to the point that it's alarming. I've also said, and I will repeat, that a number of these problem assets are good assets, which are stressed because of bad repayment schedules, as well as delays for a variety of reasons. In the longer run, they will produce revenues. And so we need to put them back on track. And so the sort of sequence of objectives is put the assets back on track, get recovery for the banks, and be fair to entrepreneurs who've taken risks. So in that sequence, put the assets back on track, get recovery for the banks, and be fair to entrepreneurs who've taken risks. If we can do that quickly, the economy is on a much better footing. I think that will help the growth process.
So some guidance on the goal curves.
Governor, this is not fair.
Thank you very much for participating.
You are not asking anybody.
Thank you very much, Shaima.
Thank you. Ladies and gentlemen,
no one gets a turn.
You may now disconnect your line.
But I have been people get 2 turns here. People get 2 turns. One is going out of turn. How will we